Ladies and gentlemen, good day and welcome to Reco Recycling Ltd Q1 FY25 conference call hosted by Kirin Advisor. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference has been recorded. I now hand the conference over to Ms. Chandni Chande from Kirin Advisors. Thank you and over to you, ma'am.
Thank you. On the behalf of Kirin Advisors, I welcome you all to the conference call of Reco Recycling Limited. From management team, we have Mr. B.K. Soni, Chairman and Managing Director. Now I hand over the call to Mr. B.K. Soni. Over to you, sir.
Okay. Thank you so much, Chandni. Good evening, everyone. I am joined on this call with my company secretary, Ms. Manisha Jaina. We both are there on the same call. Thank you for joining us today to discuss Reco Recycling Limited's financial performance for the first quarter of FY25. I am pleased to report that our results reflect a strong start of the fiscal year driven by significant growth across key financial metrics. Reco Recycling Limited is India's leading e-waste management company, pioneering e-waste recycling for nearly 20 years, with a commitment to globally accepted practices that meet international standards. Reco focuses on providing high-quality services across the entire spectrum of e-waste management, right from collection to the compliance, ensuring adherence to the e-waste management rules and Environment Protection Act. The company prioritizes innovation and industry benchmarks over cutthroat competition, offering clients, including MSMEs, MNCs, producers, that support their extended producers' responsibility obligation. Well before the formal introduction of EPR in 2016, we had started this service of introducing EPR in the year 2012 itself, but started providing commercial services for these in this financial year only. Recognizing the critical importance of recycling, the Government of India has placed a strong emphasis on the recovery of valuable materials from waste streams such as e-waste, lithium-ion batteries, and end-of-life vehicles. To regulate the handling of these materials, various rules have been established under the Environment Protection Act, authorizing specific facilities to manage this process. Reco proudly holds the distinction of being India's very first authorized recycling facility for electrical and electronic waste. Since our inception in 2005, we have been steadfast in our commitment to serve both the nation and the nature, ensuring that waste materials are managed in an environmentally responsible manner. The central government's implementation of the e-waste management and battery waste management rules, which prominently includes the EPR framework, has been a pivotal step towards the effective channelization of used equipment. These regulations place the onus on producers of electrical and electronic equipment to ensure that their products are disposed of responsibly and contribute to a more sustainable future. In the recent budget speech, Finance Minister Ms. Nirmala Sitharaman underscored the importance of recycling in the context of India's critical mineral mission. This initiative aims to secure the supply of essential minerals such as lithium, copper, cobalt, rare earth elements over and above precious and other metals, which are vital to strategic sectors like nuclear energy, renewable energy, defense, telecommunication, high-end electronics devices, and others. The minister announced the establishment of a critical mineral mission focusing on domestic production, recycling, and overseas acquisition of critical mineral assets. This mission will drive technology development, workforce training, EPR framework, and innovative financing mechanisms. At Eco, we have long believed that the success of initiatives like the Production Linked Incentive PLI scheme hinges on the secure and uninterrupted supply of precious and rare earth metals. We are convinced that recycling of waste, particularly e-waste and lithium-ion batteries, represents the most viable and sustainable source of these critical minerals. In response to the growing generation of this waste stream and increasing demand for critical minerals, Eco has already expanded its capacity to 25,200 metric ton per annum. The expansion has been funded entirely out of internal accruals, a testament to our commitment and financial prudence. Today, we are proud to serve some of the world's leading global brands, not only by recycling their e-waste, but also by providing EPR credits as mandated under the aforementioned rules. Now, I will briefly deal with the financial performance of the company for the quarter ended June 24. This quarter, on a consolidated basis, total revenue surged by 69.48% to 13.44 crores as compared to 7.93 crores in quarter 1 of 24. The company's EBITDA also saw a substantial increase of 76.38%, reaching to 10.23 crore, up from 5.80 crore, with the EBITDA margin improving by 298 basis points to 76.12%. The consolidated PAT for the quarter rose by 73.04% to 8.15 crore, reflecting a PAT margin enhancement of 125 basis points to 60.64%. The earning per share also increased by 73.36% from rupees 2.44 to 4.23 per share. And our standalone revenue surged by 86.46 year-on-year to 12.53 crore, while EBITDA saw an increase of 102.6% to rupees 9.34 crore. Our profit after tax also nearly doubled, growing by 97.6% to 7.41 crore. These numbers are a clear indication of the growing recognition and urgent need for responsible e-waste management in India. As we move forward, Eco remains dedicated to the sustainability, circularity, and environmental stewardship. Our sustained focus on innovation, investment in cutting-edge technologies, and adherence to the international standards have enhanced the demand of our premium services, leading to higher profitability. We remain confident in our comprehensive approach towards e-waste management, which we believe will continue to generate positive outcomes for our clients, our other stakeholders, and the environment for sure. Thank you. I now open the floor for questions. Thank you so much for giving me patient hearing.
Thank you. Ladies and gentlemen, just an announcement. The call will be for 60 minutes. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Viraj Mahadevia from MoneyGrow. Please go ahead.
Hi, Mr. Soni. Congratulations. Fantastic results and good to see the numbers into.
Thank you so much, Mr. Viraj.
Quick question, sir. Over the last quarter, I mean Q4, we've seen a 75% jump in total income, as you highlighted, but the materials consumed have more than halved.
Yes.
Can you explain to us what is happening there? Is that because of a larger part of the revenue this quarter is coming from EPR and your core recycling has been a smaller part of the revenue and consequently lesser your raw materials used?
Mr. Viraj, this is the greatest USP of Eco. And let me tell you and remind you about that on the previous call also I had mentioned that we insist our suppliers, particularly the producers, that if they are following certain practices in the world, in the developed countries, they should follow over here too, like giving the material at a nominal price, bearing other expenses and all other things put together. We always focus on reducing the cost of acquisition of the waste. That is one of the major reasons. And the second part, you are absolutely right. It does include EPR fees also for that quarter.
Understood. My second question, sir, is now that EPR fees have begun in earnest with the system, I'm assuming is all working with CPCB, etc. Are we expected to see EPR fees ramp up from here over the next 3 quarters?
In all probability, yes. Not only because of the quantity what we recycle and the certificate we provide of EPR, but also CPCB is looking at various factors why the material is not flowing to the formal sector and going more to the informal sector, and realize finally that it is the price difference which is giving, because of that the material is going more towards the informal. To bring it to the formal sector, the government, CPCBs particularly with the Ministry of Environment, is working on the mechanism of giving us a higher EPR fees, suggesting or mandating very shortly that higher EPR fees should be charged by the formal sector so that they can bridge the gap of price difference between formal and informal.
Okay. Very interesting. A very innovative and sensible approach.
Yes.
Sir,
really appreciate that.
Treasury on our books, how much net cash is in the business, and are we looking to monetize that for further expansions in the future?
Yeah, as I mentioned earlier in the previous 2 quarters, that we are accumulating cash, and we will assess the requirement of further investment in plant machinery and the capacity, which will be sometime in September 25. We will evaluate based on the performance of March 25 and half of the year of the next year, so that we can judge the requirement whether we need more capacity, and if yes, of which item, maybe of e-waste, and out of e-waste again, maybe a categorically PCB recycling and lithium-ion battery recycling. So this evaluation will take another 12 to 13 months from now. But till then, we will accumulate the cash.
Understood, sir. And how much is the net cash? Just quickly, this spot at the end.
Net cash figure is not there in my hand. Cash flow, can you get, Manisha, the cash flow? Yeah, but it's, we have invested by 30th June entirely 50 crores in the plant and machinery and the land building. So probably it will not be much, but yes, it's not very small also. Let me check.
No problem.
If I can answer during the further communication. Yeah.
Thank you very much.
Thank you. Thank you.
Thank you. The next question is from the line of Parveen from Nivasha Investment Advisory. Please go ahead.
Hello, Sony sir. Congrats on the very good set of numbers.
So nice of you. Thank you so much.
Sir, on our procurement side, could you help me with our approximate mix that we saw during this quarter? I mean, what portion of our procurement was via contractual arrangements? What was via secondary markets? And how much of our procurement was via imports? Any help there, sir?
Okay, so I just will move in a reverse direction. We don't import anything. 1.
Okay.
We don't procure from the market. 2. But we directly take it from our end user, which are inclusive of the multinational companies user, and the producer both. So our main source of supply, rather 100% source of supply, barring, of course, from the individual collection under the door-to-door collection from the individuals. But otherwise, we procure it from the end user and producer only.
Okay, sir. I think that helps. So the second question would be, what was the weight of the materials recycled in this quarter? The quantity.
So as I informed earlier about the method of calculation at our end, is very simple. We calculate it by 30 rupees a kg of profit. So since we made a profit of 9 crore, so we should judge it by the number. I mean, it comes to about 3,000 metric ton kind of salary.
Okay, 3,000 metric.
We don't go by the quantity, we go by the value of it.
Okay, sir. And so what was the approximate mix between recycling, refurbishment and data destruction? Is that the same as we have seen in other quarters, or was there some change here?
Broadly, it remains almost the same all the time, but yes, in case if we go for the white goods, which we are not doing at this point of time, home appliances, I mean, fridges, washing machine and all. So since they are more, for the recycling rather than refurbishment and remarketing, so we focus on the IT and mobile communication, communication devices. So our mix broadly remains the same, barring a few percentage here and there.
Okay, sir. Congrats.
So nice of you. Thank you so much.
Thank you. Ladies and gentlemen, just a reminder, anyone who wishes to ask a question may press star and 1 on the touchtone telephone now. I will repeat, anyone who wishes to ask a question may press star and 1 on the touchtone telephone. The next question is on the line of Sarang Joglekar from Vivana Capital. Please go ahead. Hello, Sarang. Please go ahead.
Yeah. First of all, congrats. I wanted to understand actually the EPR mechanism that you just mentioned. So could you
I'm sorry, your voice is not clear, boss. Your voice is not clear.
Hello, sir. Can you hear me now?
Yeah, go ahead.
Yeah. So I was asking, can you just give some context on EPR mechanism, how it works, and how are the fees decided? And you said something about CPCB encouraging the formal sector. So can you just talk about it more?
Sure, why not? So first and foremost, what EPR is, as you know about, it is extended producer's responsibility. Our producer's extended responsibility, that they are not only responsible up to the point of its use or sale, but at the end of the life also of the equipment, the producer has to collect it back from the end consumer, or they can assign this job to any other agency, including a recycler, to collect on behalf of them their sold equipment and get them recycled to the tune of 50% of that what they have placed over a period of time in the market. So this is the basic foundation of the EPR. And as far as the CPCB realized over a period of time that to achieve the higher quantity of recycling by the formal sector, there is a need to bridge the gap between the prices what an informal sector can afford to pay to the end user versus the recycler who has to invest a lot of money into a lot of equipment or infrastructure. So therefore, there is a gap, and that gap has to be filled up. And therefore, they are looking at suggesting some prices for the EPR to be charged to the producer, which will meet the gap between the formal and informal recyclers, and formal recyclers will get much higher quantity in future.
All right, sir. Got it. On the recycling business side, so you procure the e-waste from these MNCs that you talked about, and then you sell that after recycling to those MNCs again, or the producers again, or in the open market. How does that work?
So these are all, metals, primarily metals, plastic and glass. And producers don't need them. The producers of electronic equipment don't need, but their suppliers certainly need all these items. So they may be one of the set of purchasers, but we don't deal directly with them. it goes to the smelter to them, the finished goods, because there has to be refining and one has to do that kind of task. So all the aluminium, copper, ferrous, gold, everything passes through the smelting process, refining process, and then goes to the probably producers directly if they are producing.
Okay, so you don't directly sell the recycled materials to the producers?
No, it doesn't really go that way.
Okay, got it. That's it from my side. I'll come back in the queue.
Yeah, thank you, Ji.
Thank you. The next question is from the line of Darshit Shah from Nirvana Capital Group. Please go ahead.
Yeah, congratulations, Sony, for a great
Thank you,
set of
Mr.
numbers.
Darshit. Thank you so much.
Sir, can you please quantify, if possible, how much was the EPR revenue this quarter?
Darshit, we would like to, we would like to hold on those breakup with us.
Okay.
But, in the revenue from operations, it includes both, or rather three: recycled material, refurbished, EPR fees, and of course the data restriction service charges. So it's a combination of all four. But giving breakup at this point of time may not be possible for me, please.
No problem. And sir, just one other question on the client that we had onboarded in the new plant. How is the progress, if you can highlight that point?
I'm sure that this is reflected in the performance. And you will appreciate the kind of turnover also. The revenue line has also gone out. So there is a good amount of value addition, about more than 3 crore in the quarter to quarter. And so that is getting reflected. And going forward with this further scheme of CPCB, if becomes implement, or if it is implemented, which is hopefully in the coming week itself, so things will move much faster.
And do we expect the ramp up from this client going any further future quarters?
Yes, we are certainly expecting, because obligation of each one of these clients of ours and other recyclers are much higher. But just because of the price difference, we were unable to get that quantum. And so now this time has come for that.
And sir, on the CPCB thing which you highlighted on the EPR fees, which they want to kind of formalize, and the decision is probably going to happen in a week's time. So, that would be for the fees would be for different materials, different fees, or how would that work out for different e-waste, or would be like specific?
Yeah, okay. So, this, all the e-waste, 106 items of e-waste, which are covered under the rules, have been categorized into 7 categories. Okay, like IT devices, medical equipment, toys, home appliances, and all this kind of 7 items. So they are suggesting category-wise, under the 7 categories, certain fees to be charged to the producer towards EPR. And so this will be applicable to different categories, not on the metals. Based on this category-wise price of the EPR, we can allocate amongst the metals, different metals, based on their component or constituents in the particular item.
And if the understanding is correct, this would be higher than what currently the recyclers are getting in terms of EPR fees.
Yes. It is higher.
I'll come back in the queue.
Yeah, it is
higher.
Than,
okay.
Yeah.
Currently, what the normal average rate is.
Correct. What the normal market rate is, much above that, much higher than that.
Great, sir. I'll come back in the queue. Thank you, sir.
No, thank you, Darshan.
Thank you. The next question is from the line of Pradit Rawat from Yogya Capital. Please go ahead.
Yeah, good evening and thank you for the opportunity. So, sir, as you mentioned that our company procure much of the raw material from MNCs, and you also mentioned that we reduce our raw material cost. So I wanted to understand how did we manage to reduce our raw material cost from the MNCs?
Excellent. Let me tell you, boss, there are different categories of the recycling systems in the world. So not that every system or every machinery protects the environment to the extent it is required. So if you invest in the high-end technologies and take care of the protection of the environment, then obviously the multinational companies who are giving their e-waste to you, they are not giving just only for the sake of formality to meet, but for them it's a real compliance and obligations towards the environment. And when we invest that kind of money, and in our case, as you know better than me about that, everything has been invested out of internal accruals. So we have lesser burden of expenses. And when we ask for the good price from the multinational companies or the class A producers in the world, they never hesitate to pay the fees of our choice because of the environmental compliances and not only to meet the formality of the waste management rules. This is the driver of our price, our premium service charges.
Okay. And I just wanted to understand more about our raw material mix. So, what would be the concentration of raw material mix? So how much of the top 5 suppliers make up of our raw material cost?
Okay, so it hardly matters that what is the mix of the waste, because finally under the EPR, I'm supposed to provide the credit on the basis of 4 metals. So combination, permutation of material does not really matter. What really matters is coming from the source. So that is very important. In our case, as I mentioned, it's multinational companies and class A producers. That is first thing. And the second part of your question was probably? What was the second part of it?
Just that only.
Sorry?
Yeah, it was just that only. I just wanted to understand how much revenue, how much cost of goods is sourced from top 5 MNCs.
No, we never talk about our clients' names and all. That was second part of your question. So sorry, excuse me for that.
Yeah, understood. So can you provide the number that EPR fee that we generated in this quarter?
So as I just told to Darshit also that we don't give the breakup because our premium fees is different than the market, and I do not want to make an indication of our fees to the competitor. Please excuse me for that.
Yeah, understood. Okay. And last question regarding our new facility. So how is the ramp up going on and what is the current utilization at which we are running?
So it was a very nominal utilization during the June quarter because on 5th June we formally inaugurated it and we received all the consent for the batteries and the e-waste, everything. So we hardly have utilized during the quarter of June. And we have sufficient capacity available in our first facility itself. And hopefully, with the quantity moving forward faster, the capacity utilization at both the facilities will increase substantially over a period of time. So I'm unable to give a number of, in terms of percentage of the capacity, but as I envisage that yes, much higher utilization will happen going forward.
Yeah, okay. Thank you for answering all the questions and best of luck.
My pleasure. Thank you so much.
Thank you. The next question is from the line of Vivek Seth, an individual investor. Please go ahead.
Thank you for the opportunity. We had some arrangement with Terra some time back. So just wanted to know how is this arrangement benefiting the company?
Yes, it is yielding results now because a lot of other clients we got connected in the global market. And as you know, we are otherwise providing our services in the global market. And so the addition with the Terra and Terra's other members is expanding our wings and is adding to gradually the business. We are very hopeful about this particular because they are, these members of Terra are a cream layer of the recycling community in the global market. We are about 120 only in all in Terra. So working with each other really adds a lot of value. Not always in terms of the money only or the material only, but lots of other benefits do come to us.
Okay. Another question, sir. Do we have some patents on the machines or the processes belonging to our company?
Sorry, come again?